Welcome back to Trading Hour. Well, as promised, Deepak Ramaraju, Senior Fund Manager at Shriram AMC, joins us now to discuss market fundamentals as well as his top sectoral picks. Thank you so much for joining us, Deepak. First up, give us a sense of what exactly you're making of the current market fall. Where do you see valuations turn attractive, or are you still playing it safe by continuing to not deploy incremental flows into the market?
So, thanks for having me on the show, first of all. And markets are seriously kind of come down quite a bit, and then we are seeing kind of aggressive kind of selling coming from the FII side. But having said that, it's time to kind of building the books right now. So slowly add into those beaten down stocks and try to build out those quality names which are going to outperform in the near-term future. So that's what we are looking at as of now. So, but the market is still in the kind of negative mode as of now. The correction is still going on from the FI side, and we expect that to continue for some more time until unless the conditions, especially the tariff conditions or the related inflation situations, isn't out there. We don't expect the FIs to turn positive on the Indian markets immediately. So, having said that, we are going to still see that FI selling to continue, and that's the reason we are going to be kind of seeing the pressure. But we are not very far off from the bottom. That's my sense on the market.
You were not far off from the bottom. That's your view.
Yeah.
Okay, and this is even on mid and small caps, or do you think mid and small caps is still a bit overextended?
Mid and small caps, still the relatively valuations are still on the higher side. We can expect some more corrections to come in, but the smarter money are kind of adding on those quality names. So some of the institutional buyers or the HNI money, we are seeing some kind of buying happening in those counters. But again, it's going to be like quality names, we need to pick it up. So it's going to be a stock picking market going ahead. So one needs to be very selective in the stock picking, and it has to be on the quality side going ahead. So that's what my sense on the market is as of now.
Deepak, so where are you seeing value emerge? Which sectors, which pockets of the market do you feel that one can start looking into now?
So I'm still positive on the consumption theme as a whole. So overall consumption is going to do, and would be more on the domestic focused companies rather than looking at the external focused companies. So that would be the broader theme that I'll be more focused upon. So when I talk about the broader theme on the domestic focus, it will be more to do with the capital goods, which are supporting the infrastructure growth here to a certain extent. Though the stocks are still relatively expensive, there's some more kind of froth left in those names. So we are seeing the correction happening in those parts. But yeah, eventually we can expect some kind of buying to come back, and this sector can actually bounce back very strongly. One. Second thing, power and power-related stocks are really doing good, and the power demand is going to go exponentially from here on. So we can expect the power and the power-related sector or the kind of transmissions space to do better well going ahead. So those are the space which are expected to perform better going in my view. And from a tax break perspective, which was a positive for the consumption side, so you can see some incremental discretionary spending to come up. So that's another space that I'll be more bullish upon going ahead.
What about banks? Where do you stand on banks, Deepak? And NBFCs? Is value emerging in NBFCs?
Definitely there is a short-term valuation uptick, but from a long-term story perspective, the long-term impact on the banking space is going to be more competitive. The NIMs are going to be very kind of under control stress, because the deposits also have to kind of go up, and as well as we are seeing more kind of pressure coming in there. So from a short-term valuation uptick, yeah, it makes sense to have some kind of short-term buying on the banks. But from a structural perspective, for the long-term kind of portfolio construction, I would look at selected names, especially very choosy on the selected names, especially on the private sector banks, or for that matter, a few selected NBFCs. I would avoid the microfinance space as of now, because the NPAs are still on the rising as of now, and we are still seeing the stress, especially coming from the rural side. So we'll definitely avoid the microfinance space or the banks which are kind of having exposure to the microfinance lending. So we'll be avoiding those space going ahead. So selected names is what we'll be focused upon. I would be more bullish on the power lenders, basically the power sector lenders. So those things are emerging much more strongly as of now.
So within the financials, you prefer power lenders. Some names there include REC, PSC, as well as IREDA. Well, you've spoken about utilities, you've spoken about power lenders. So clearly you do have a preference as far as the power space is concerned. You also spoke about transmission. So would you play the power sector through utilities, public sector or private sector, or would you play it through the ancillary companies, name, some of the capital goods companies, transformer makers? Where exactly do you see your preference lie?
So I would have a combination of both. So would more prefer to direct it towards the ancillaries and then as well as the capital goods space. Because again, they also have an export-oriented focus there as well, not only the domestic market, they'll also be catering to the other export markets as well. So the transformers companies really look positive from here on, and as well as some of the ancillaries like your switch gears and kind of manufacturing companies. Those are the companies which really expected to perform better going ahead.
Understood that. Within the consumption space, you said that you're now turning incrementally constructive. Where does your preference lie? Is it more discretionary consumption, or do you like some of the staples?
Discretionary consumption is definitely the space that we want to be in. Staples are more kind of a saturated space to a large extent. The urban demand is kind of growing in a single digit. So I don't expect it to do a double digit growth or any kind of significant growth coming here from the staple side. But discretionary spending, definitely yes, because of the tax breaks and kind of the money left at the hands of the citizens. So it is going to get manifested into kind of discretionary spending or aspirational buying. So that's where I'll be more focused upon looking at the premiumization theme as a whole. So look at some high-end kind of companies like, for example, auto space, and as well as the durables spaces. So those are the companies that we need to focus upon, where the premiumization themes or the aspirational buying is going to happen. So those are the themes that are going to outperform compared to the generic staples kind of companies.
Understood that. One large sector as far as the economy is concerned, also a GDP multiplier, has been the real estate space. Realty stocks, especially in the last month, have seen a significant correction. Do you feel that this particular sector has further legs to run up from here on, or will you be cautious at current levels?
I'm still cautious as of now on the real estate side, but eventually, as we go, the valuation still has to correct more in the real estate space. So it's not really attractive. And also with the aspirational buying coming, you might see some kind of uptick happening in the kind of the properties or the upscale market, but we'll be very selective and choosy on the names. So we're not adding a big high ticket numbers or kind of have a broad-based kind of view on the real estate. So it's going to be kind of a muted kind of a growth for real estate to going ahead, in my view. So.
Okay, your preference lies with consumer discretionary power and power utilities. Thank you. We got that. Thank you, Deepak, for joining in. Now let's get our viewers the big exclusive.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.